Good morning, Paul Georgie from Allendale on this Monday morning, July 25th. The rains came here across northern Illinois, basically north of I-80, and actually a southern portion of Wisconsin over the weekend, dropping large amounts of rain. Right here locally where we got the office, we've had about 5.5 to 6.5 inches, depending on where you were, over a short period of time. Just a tremendous amount of moisture. We'd certainly be happy to share that with as many people as possible, but it doesn't look like that was the case. Southern Illinois, Missouri, there was some showers that moved through those areas. Even central Illinois had some shower activity, but very isolated, and if you were lucky enough to be under one of those showers, crops are going to show some improvement. However, talking to producers late last night from Indiana to central Illinois to western Iowa, they were all telling me that, well, we didn't get any rain, and corn is starting to show some real stress damage, and we're in the middle of pollination. So we've got crop conditions reports out this afternoon. That's going to more than likely show a decline of several percent, is what the trade's expecting right now. Decline in the good to excellent category. We've also, and the weather forecast is taking some of the extreme heat out, or the ridging formations that they were talking about last week, kind of putting more of us into a zonal flow, expecting some scattered showers throughout the Midwest here over the next several days, which certainly is going to be helpful for the crop. The problem is we need to get it sooner than later in order to stop the damage in a lot of these areas. Other news that is affecting the markets here, and as we say, it's like that 800-pound gorilla that's affecting the corn market and the grain markets, is what's going on in Washington. The Democrats and Republicans now are saying they're both working on a plan to get this debt ceiling lifted and keep the U.S. from default. That's a very novel idea at this stage of the game, that they're both going back working on their own plans. They should be working together and get this problem solved. That we don't need the weight of this on the investor, which could have a huge impact on agricultural markets here and agricultural prices if the investor decides to move out of investments for a period of time as this default process continues. Moody's also came out with some comments about Greece this morning, saying that it's very likely that Greece will default here before more money is given to them, and that could cause some problems in the euro down the road. I know Germany has not voted yet in support of Merkel's agreement last week that he signed off on. So there's still some uncertainty there that is causing problems as well. And all of this does is creates concern in the investor's mind. And as we seen last week up through the Tuesday of last week in the Commitment of Traders report, we had an increase in long positions, in corn, soybeans, even in wheat, where the funds were actually carrying a short position. They still are short, but they reduced that short position by almost 7,000 contracts. We did have some good news for the grains, not so good news for the cattle. On the cattle on feed report Friday afternoon, the placement number, which everybody was watching, trade was expecting a 7% decline in cattle placed, came in as a 4% increase. We had 9 out of the 11 states reporting an increase in cattle on feed this last month, which is really a surprise when you've got the negative returns that are these cattle are coming out with, that are coming out of the feedlots right now, showing producers and feedlot operators. So a bit of a surprise there, but I think weather conditions, pasture conditions have certainly forced cattle into the feedlots, and that in turn should help demand and give us an adjustment here on this next quarterly stocks report that we'll see coming out at the end of September. Cutout values on beef down 89 cents, select down 111. Continue to play the cat and mouse situation there in the packers and feedlots. The extreme heat has caused a need to move these cattle, and that has allowed the packers to buy these cattle cheaper. In the pork complex, cutout values there changed very little. I think the investor attitude is causing the pressure in the pork last week. We could see some follow through there, expecting some follow through there on the opening. So I think one thing for sure, we're going to have volatility again this week, going into the first of the month. We got the first notice day in soybeans here later on this week. So a lot of uncertainty, and sure seems like we're going to have a lot of choppiness ahead of us this week. Stay in touch with Allendale Research. We'll try to keep you informed the best we can. I'll be out in Iowa here on Wednesday and Thursday, and then up near Buffalo, North Dakota on Friday afternoon. So if you're in those areas, stop in and see me. I'd be very happy to introduce myself. And we do wish you a very successful trading day, and we'll talk to you tomorrow morning.